Okay, so last video we did, we got up to this candle here, which we noticed broke the bottom of that. So just peaked lower. So yeah, this candle's just peaked a little bit lower than this one. So we would say that that candle broke the previous low, which allowed us to move our stop loss from the previous high, which was up there, to this previous high, which were 10 pips above that, so it was around there. But because that happened over the weekend, this candle happened before I woke up this morning, and I exited just a little bit above that, so it was ended up getting about 2 pips above that. So it should have been a 12 pips above the previous high, and sorry, it should have been 10 pips above the previous high, ended up being more like 12, something like that. So the profit on this trade, and yeah, obviously this blue candle triggered us out, so should have been around there, but it was just a fraction higher that we ended up getting out. And so if we get rid of this little box, just hover over these arrows, show us what the software is actually. The software automatically generates these arrows for where you entered and where you exited. And if they're green, it just means you made profit. And this is how much profit we made. So on this trade, we made 7.4 pips. And if you just hover over the arrow, it tells you that green line appears. So it shows you the exact point we entered and exited. So yeah, that was that. So the market came down around 50 points in our favor, about that. But the trading system doesn't tell us to get out when we hit a target. It just tells us to keep following the trend. So although we can look at this and say, well, hang on, it made 50, why did we exit it at 7.4? Long term, this trading strategy makes more money than it loses. So according to all the back testing, and I've done hours and hours and hours of back testing, if we follow the exact same rules, then we make money. But if you just if we set the target at say 50 pips, because that's what this trade would have done, then there's other trades that would have made, that according to our trading strategy, made say 200 pips. We would only be exiting at 50. So on some trades it comes down a long way and then it comes back up like it did here. But we never know what's going to happen. So if we just have a set of rules that we know works and we stick to the rules, then we're going to be making money long term. So that's it. That's how this trade played out. So entry and exit. So it was something like there to there. A little green box just signifying that was the distance of the winning trade. In the next trade we enter. Oh, actually, so let's set up the rules for what would need to happen for us to enter another trade. If we zoom out, I'll just lift that up. So, according to our rules, at this stage, this is the most current low. It's the most current. Yes, sorry, that's correct. So that's the most current low. If the price comes down, let's say the price comes down here, and then comes up and makes a higher high, that means this high would have been broken, and this, this one becomes our most recent low. And what we do is we enter on the break of that low if it goes 10 pips below it. So, for example, at the moment we would enter if the market came straight down there, but if it comes down and then back up and breaks the previous high, we enter 10 pips on the break of that. So basically we're going to keep stair-stepping up until it comes down and triggers us in. As long as the 4-hour chart doesn't have a reversal. So we'll just keep looking at this on the 1-hour chart until this is the 4-hour chart, until the price comes up all the way up here and touches this green line. As soon as that touches the green line, we'll then go back to the 1-hour chart and be looking at taking a buy trade. But so all this stuff that I've drawn is all in relation to a sell trade. So because the 4-hour is still in a sell market, it's still in a sell, we'll just only be looking at sell trades on the 1 hour. So hopefully that makes sense.